Hello, everyone, and welcome. We appreciate you joining us today. The goal of this webinar is to give you some background on MetalMiner. We're going to go through our company, what we do, our products, and give you some insight in terms of where we're going as well. We're just going to get started here, just waiting for a couple of people. Again, thanks for joining. The purpose of this webinar is to provide a background on MetalMiner, provide a quick company overview, show our products, and give you a sense of where we're heading as well. So with that, we'll get started. What we'll cover, quick introduction, problems we solve, our company and product. We'll get into actually showing you what we're doing with our product, MetalMiner Insights and Workbench, and also where we're going with MetalMiner Neural and Insights SV, which is our tool for part level spend analysis. And then if we have any time, we'll take some questions as well. So let's get started. I always find it's important to humanize things. So I'll just give some quick background on us, the participants. Yours truly. I am managing director of MetalMiner. I focus on partnerships and growth. My background is at free markets and spend matters. Kind of a unique fact about me, I apprenticed as an antiquarian bookbinder back in the day before I got into this whole world of procurement. Lisa Reisman, our CEO, and who was also in charge of product strategy. Lisa has worked in metals trading earlier in her career, as well as Anderson and Deloitte. Surprise fact about Lisa is she mapped the Iranian aluminum supply chain for the UN to expose the flow of nuclear grade materials to Iran. And then Don Hauser, who focuses on customer success. Don's background is John Deere and the US Army. And surprise fact about Don is that he's a former police officer. So excited to be presenting with my co-host. To give you a quick introduction to the problems we're solving at MetalMiner, our clients really see four different things in terms of why they come to us. The first is price volatility. They have a really hard time estimating where markets are going and in estimating material costs. And because of that, they can't forecast margins. They have a lack of actionable forecasts, so they don't have a long or short-term buying strategy based on where the market is headed. They have a really hard time discerning market trends and market drivers. This translates in many cases into savings and margin erosion. So they lose savings on the front end and they lose savings on the back end, to channel CarMax commercials of yesterday. And our focus there again is providing insight to drive savings. We'll show you how we do it. And then contracting decisions. Should we buy on the spot market versus long-term contracting? Huge kind of question which never goes out of style in direct materials procurement. Our product, which you'll see, combines live updates on the markets with specific sourcing strategy recommendations, forecasts, cost models, and correlation. Again, we'll show it to you so you can get a flavor for it yourself. And our whole reason for being here is to drive near-term EBITDA impact, as well as long-term savings and resilience over legacy buying approaches. I apologize for all the content on this slide. I'll kind of walk through some of it very quickly just to give you a quick overview of what we do. Overall, our whole entire focus again is on helping procurement organizations focus on managing margins, smoothing commodity volatility, and generating savings. By the numbers, we do a very poor job kind of bragging about this, but we have over 70 clients today. We recently won a DARPA contract with our partner Exeger to forecast critical minerals for the US defense supply chain. We're very fast growing. I've been an analyst in this market for over 20 years, and there are very few companies I see in this market growing as quickly as we are. We're profitable. We have over 4,000 metal data sets today. We track 110 metals and we do 60 forecasts. Again, that's as of the end of last year. It's gone up since then. We have 10 years of pricing history for most metals. And in terms of kind of focus on the platform, we get down to the form, grade, and alloy level, cover the full range of not only industrial metals, but also rare earth, minor, and other metals. As you'll see, we get into price tracking and correlation analysis, short and long-term forecasts. There's charting built into it, and there's granular cost models as well. That's in the core platform. We're also going to show you some of what is coming around the corner and is in beta today. Lisa, I'll pass it to you to talk about a little bit about what makes this different.
Great. We always get this question when we're on demo calls with anybody. So first thing is, a lot of our prices come from the exchanges that all of you already know and may use. What I think makes us a little bit differentiated in the marketplace, we are able to create essentially transparent prices for our customers. We often get requests from companies for obscure or not even obscure, but materials, for example, like recycled aluminum is an example where there is no existing price index. We're able to work with companies to create transparent price indexes. So our forecasting is embedded in our platform and really comes from the genesis of it was when we started in 2015. We wanted to create a forecast that was actionable. And what I mean by that is actually helps buying organizations make better decisions, like, should I buy forward? Should I hold? We actually give that kind of guidance, and that's kind of embedded into what we do. Historical information is so critical. You all ask for it for a lot of reasons. We need it in order to develop forward price curves, to develop our neural nets, which we'll talk about in a little bit. So we've started the platform back in 2012 and collecting historical price data. We have full licenses for a lot of that data, et cetera. I think where we are differentiated in the market is, we're not going to be able to compete by being the named PRA for some of your contracts. So we really have emphasized on our team of building out a data science platform. We use a lot of statistical analyses, a lot of data science, essentially, and we're availing ourselves of all of those tools to help bring something to market, kind of combining industry expertise with the AI and the data science. And then in terms of benchmark data, we've learned the hard way of how to benchmark data. But we're able to quickly take in client data if need be, particularly for weird and obscure items, and then go ahead and correlate that against other things in our database to kind of showcase or provide an insight as to the relationship that material may have with something else in the world that is trackable. Jason, maybe the next slide. Jason touched on sort of what are some of the core things that people use us for, but I just kind of wanted to go into these. I would say that the majority of every phone call we pick up kind of falls into one of these 5 buckets. So to some extent, we get into, on the front end, we're starting to work with product development teams that are looking to understand underlying cost data for the parts that they design by being able to see, should I spec this with a 416 stainless, or can I use should I use a 304 or whatever, and which one is higher priced, and can I get away with using something else? So we have seen our data be pulled quite a bit into kind of that new product development. I've kind of tied that into number 2. I think the other piece is, if you've got a category that has not been sort of examined or looked at under a strategic sourcing process, people are using our data to help understand, like, well, how much did the market go up? Where am I relative to the market? Have we bid out this category recently? And they're using our price data kind of help anchor the price. So we're seeing that's kind of covering numbers 1 and 2. Number 3 is kind of really interesting, and we're going to show some what I'm going to call kind of forward cost modeling efforts that help companies manage their contracts, where they are on a contract mechanism, the price updates on a quarterly basis. They need to update all of their price data. That's one piece of what we do, but we also work with companies that are essentially trying to create tools to model out what should we be paying for the parts and materials that we're buying. So our data is pulled into other companies' platforms to do that. I think our number 4 is actually, I would say, the piece that's sort of, I'm going to call it the motherhood and apple pie of MetalMiner, really helping companies understand when prices are moving. So kind of an active, you think about risk management platforms that offer little pings and tools about what's happening. That's essentially what the MetalMiner platform offers. So as prices fall outside or move outside of an expected trading range, we're pinging you, the buying organization, to say, hey, you might need to take action on this. Maybe you need to lock forward, or maybe you should stop buying and just kind of, quote, buy down the market. You've heard me mention already a couple of times in this brief amount that I've been speaking about the book of Weird and Obscure. That's actually one of my favorite things to help companies identify alternative data sources. So we get a lot of inbounds for, I'm buying this weird XYZ metal. I don't know what I can use to kind of track what it's doing. And so, is there anything that you can recommend that we use? Sometimes we know the answer. Oftentimes we don't. We can take that data inside our system, analyze it, correlate it, and give you back an insight. Like, yes, you can use XYZ price to give you an indication of what's going on with your weird and obscure metal. Okay, Jason, I'm not sure if I'm the next slide or not. I'll let you move on.
I'll take it. And then I know everybody wants to see what we're up to, so we'll get into that really quickly. But I always find it helpful to kind of level set where we are today and where we're going tomorrow. So in 2024, we've launched into defense and government pretty aggressively. We are ramping up our technology development, sales, and marketing teams, made some strategic hires, and we'll be making more. We've launched MetalMiner Insights, so making our data and forecasts available in customer and partner apps via our API. We have a couple of early customers there on the platform side, and we'll be announcing some others later this year. We've introduced MetalMiner data solutions to support internal initiatives around AI and ML, both for training data sets, but also obviously for current market insight as well. We've launched initial partnerships with technology providers and consultants, and we're really trying to do a lot to educate our customers as to how we fit into the traditional source to pay lifecycle. I think one thing that's been really detached with traditional PRAs, as well as market intelligence companies, is they don't put this in the language of the chief procurement officer. So we're really trying to educate folks, almost as analysts, in terms of how MetalMiner fits. So an example of one white paper available on our website is the MetalMiner Way. How do you use this data to get savings across the source to pay process? In terms of strategy, we're investing a lot in long-term price forecasting. We're pretty confident we have the best short-term track record in the market. We've got a bunch of documents on that if you're interested, and we will be the best long-term. Lisa will share some things we're up to there. We're going to broaden our product portfolio across metal sourcing, spend analysis, and category management. Already we have some real use cases for AI. There's a lot of BS in the market in terms of what people are actually doing. We've been deploying it for a long time, but we're also deploying it in new ways. We're using neural nets for forecasting. We'll be introducing a co-pilot to ask MetalMiner for strategy and the like. And then we're really listening to our customers and going deep with some on partnering for new price points, for contracting and indices, forecasting, part level insights, analytics, and ERP and systems integration. So with that, we're going to get into some demos in a second. But first, we have a quick poll question, which I think is going to pop up on your screen. And if you could just vote, and we will share the results afterwards. So thinking about your emerging needs that MetalMiner or firms like us could offer, what is most valuable? That would be great. Let's give a minute here.
No poll. Actually, Jason,
yeah, I'll keep going. The challenge of Zoom webinars and LinkedIn Live together. Okay, well, we'll get to the fun stuff then. So Lisa, I'll pass it back to you for our perspective on prices.
Right. I'd like to spend a moment just talking about our philosophy, because I think this also kind of differentiates us from some of our competitors. One of the key things, and the reason why we think about, MetalMiner instead of just picking one particular metal, is we really spend a lot of time studying the behavior of the individual metals and the relationships that those individual metals have together as an asset class. And sometimes, copper tells us something that's going on, for example, with hot rolled coil. So we don't think any single commodity exists in a vacuum. Part of our intel and how we look at a product, or a price rather, is how does it behave compared to others? What are the underlying trends across all of the metals? Because that may provide the direction for where prices are going. So that's why we kind of look at that in that way. I think that's a little bit differentiated. We also are what I call price purists, and I love to have philosophical arguments over this point. In other words, what we mean is, by being a price purist, we believe that everything, all of the supply factors, all of the demand factors, all the geopolitical factors, capacity constraints, monopolistic practices, whatever it is, we believe that that is all encaptured in the price itself. That the price is the mechanism that tells us all of those other pieces. And as we've seen, and actually maybe have seen very recently, that includes speculative interest, which we think maybe might be happening within the copper market right now. So that's a philosophical difference in how we look at the market. And the reason why I say that is because I think others look at the market from a fundamentals perspective, looking at what the supply is looking like and what the demand is looking like, marrying these two concepts together and saying, this is where the price should be or ought to be. And we believe that traders, momentum, speculation, all of that is kind of baked into that price. So that's kind of just a little bit philosophically how we look at the markets. It's also how we look at our forecasts. So, it's kind of set up, and Don, my colleague, is going to show you that in a minute. It's set up as kind of the way a trader is trading, because those traded products, those exchange traded products, are indeed impacting the prices that you all pay from an industrial markets perspective. So, okay, with that, I think Jason, yes. So I think I'm going to shift gears here and turn the mic over to my colleague Don, who'll kind of walk us through a few pieces of the MetalMiner Insights platform.
Great, thanks, Lisa. So I'm going to share my screen. As we all know, Don doesn't go through slides very well. So this is basically our platform landing page, and you see some kind of overall things, a little heat map of what all the big metals are doing, at least the big movers. Lisa talked about we look at them individually, but we also look at them as a pack. So what's going on with a group of metals? Sometimes you'll see like everything is green and you only have a couple that are red, and then well, that kind of stands out, what's going on. And these two, why are these different from these? So that's kind of high level what we're looking at here. I'll just jump into aluminum and I'll show you a little bit about what it looks like, what it feels like coming in. So aluminum, you're going to see a LME displays first off here. So history, you can see some of the ups and downs in the history, and then the forecasting is in here also. Like Lisa said, we forecast a little bit different with support and resistance bands, and then outside of that, where's it going, what's it doing? We don't really forecast the price. We don't feel like knowing the price is all that actionable. Knowing the trend is what's important, and that's really what we're trying to do with the support and resistance bands here, is identify a trend. You can see, for instance, this is kind of bouncing around in the band. It's doing so what? It's not really doing anything. It's just normal market noise. When it starts to break out, that's when something happens, and you should do something, which goes into an industrial buying strategy. It's a little bit different than you'll see from a lot of our competitors, is an actual industrial buying strategy. So we are actually making a recommendation, not just, well, we think it's going up or we think it's going down. We'll say, hey, if we're buying aluminum with our own money, right now it seems to be going up. We would hedge that right now. We would fix that price, or maybe buy forward a contract, or some of those type of things. And then the same on the way down, we would say, hey, only buy exactly what you need. It's going to be cheaper the next time you buy. We will actually we trust in our forecast and our methodology, our thought process in it enough that we actually make those recommendations to our customers. We have those calls kind of on a regular basis when the markets are really volatile. We just had a customer a couple of weeks ago talk about copper. We get them on aluminum all the time. Hey, I'm really looking forward. I can buy right now and lock in 3 months or 6 months, or I can buy as needed. What should I do? And we make those hard recommendations. We don't get them right all the time. We get them right most of the time, because we're identifying trends and using some of the tools that Lisa and Jason talked about earlier. So that's kind of the forecast. How we forecast a little bit different. how we identify the trends, not the actual price to the dollar, and how customers are using that forecast to really mitigate some of the risk. So that's sort of how the pricing and the forecast works. Now I'm going to jump into a should cost model. These are very effective. I'll jump into the stainless one. That's probably the best one, the most used one. The stainless market is easily the most opaque market out there. When you look at what's available for price transparency, it's really tough. You can jump through all these different grades. You can punch in basically what you're buying and how you're buying, whether it's a different kind of finish, or are you buying a coil or a cut to length, some different vinyls, some of those type of things. And based on what you put in there, actually, what are you buying? What's your grade? Finishes, some of those things. It will break everything out for you down here. And this is our should cost model. We break it out into 2 mills and then a spot price. This has a service center markup. Basically, if you're buying through distribution and not through the mill, of course, there's going to be a markup through there. And it breaks everything out into a discounted base, your gauge, grade, width adders, finish, vinyl, cut to length, kind of subtotal that up. And we also have the surcharge in there. It's very important with stainless, some grades more than others, obviously. And we forecast for the next month's surcharge. It only goes out 1 month, but it can be pretty helpful. You see in this case, looks like it's going to go up 17, 18 cents for next month's surcharge. So you can use that for some of your tactical stuff. If you have something that you might be able to pull in this month versus next month, the surcharge is going up next month, might be advantageous to pull that in now versus waiting for next month. Some of those type of things, you can't set up long strategies on that, obviously, but some of these small things add up month over month. If you're kind of pushing and pulling some of this as needed, you can kind of save some money that way too. That's kind of how the stainless works. And then I wanted to show everyone some of the tools. Lisa always talks about we're really kind of more data scientists in the metals market than a price reporter, which is 100% true. We're not really just calling somebody and then telling you the price that everybody said on the call. We're really trying to get into the data, how to use it, something a little bit better. So I'll just pull up a couple things here. We'll do hot roll coil and some steel plate. Forever, carbon steel is kind of my background forever. Everyone thought these two were correlated, and really for a long time they're fairly close, and then they weren't. So this is some of the tools that we kind of use. You can look at something really quick. We used this a lot. There's a lot of crossover in steel at certain gauges, between 1/4 and 3/4 inch. You can really use either one of these products. Sometimes if you're set up to switch back and forth, you can use tools like this to really tell you, hey, I should be switching this to coil, or I should be switching this to plate, kind of back and forth. Some of that stuff, you can see the spreads here. You can save a ton of money doing that sometimes. And then what do the numbers really say? Is it correlated? Is it not? 76%. It's correlated, but it's pretty weak. Historically, if you talk to the old time steel guys, they'll tell you, yes, it's correlated. Well, not really, not so much. Used to be, now not so much. You can also see some price changes, kind of broken out into some individual buckets. A lot of times this is good if you set your standard cost and then you want to track it from 1/4 to 1/4, for instance. You can kind of see where that was going, maybe what you predicted it versus what it actually did. Some of that's in here. You can put some custom dates in here. So if you wanted to land exactly on a contract time that you set up, or your fiscal quarters, some of those type of things, you can put some actual start dates in here and kind of let it roll that way. That's kind of some of the tools there. I'll stop sharing and throw it back over to Lisa.
Okay, Jason, are we on a slide, or I'm next to show some sausage making, I think. Is that right? Okay, let me share my screen. I am going to share some of our sausage making. I think a lot of people have asked kind of, how do we come up with those support and resistance bands? And I'm not going to lie, I think initially when we started forecasting, it was very much a human intervention. situation. Since then, we've kind of developed this tool, and I'm just going to like kind of run so you all can see. So I'm just going to pull up like an LME aluminum, look at the 3-month price. And I'm going to run the model in a second, but what you can see is that it kind of pulls up what we think it's going to regress well with. And then we essentially run this model. I'm going to ask for your patience while the model is kind of chugging in the background. And we basically use an MLR, a REMA model for those of you that are statistically oriented. We aim to publish forecasts that have a lower than 5% average error rate. We tend to use a blended output. And this is where the support and resistance bands come from, those red and green lines that Don had shown earlier. So I just wanted to kind of show this to see, like, this is how we generate the short-term forecasts. In terms of the longer-term forecasts, which was the bar chart or the bar chart on the right, today that is done through technical analysis. And when I say technical analysis, it's really how hedge funds are looking at the market. So they're looking at average weighted volume, they're looking at open interest, they're looking at trader momentum, et cetera. And so technical analysis is what we look at or what we use to create a forward 12-month view. Jason, you go to the next slide. So we use the forward 12-month view. And then after that, this is kind of the pivot, and I won't say the pivot, but we're actually really working on developing neural nets that are very specific to the grades that companies buy, of the materials that they buy. So kind of, what goes into a neural net? We've had a lot of questions on this, and just kind of like high level, give a sense of, how we think about a neural net. It really starts, and the slide doesn't show it, really starts with a hypothesis. And the hypothesis is, what do you think actually moves the market? And you would be surprised at what kind of can go into a hypothesis. Something that moves the lithium market is not the same thing that's going to move the aluminum market. So it's understanding what those drivers are, and then how do you best represent those drivers in the form of data. So, I'm giving a sense of some of the data that we might look at. So, you have an index price. So we may use a federal funds rate, for example. We're going to certainly use historical price data. We may get into something that's more what we call probabilistic data. It's the more sophisticated, where you're layering in additional elements into your model. So an example of something probabilistic might be, what is the likelihood that 301 tariffs are going to come off in the next 12 months? And you essentially can program in these different probabilistic elements. The neural net essentially learns and then projects forward. So the reason, or the way we are able to get really high accuracy rates, is essentially in a neural net, you're leaving out the last 3 years of price data. So your model is essentially predicting what's going to happen. So in this case, between the years 2021 and 2024, and we can actually see how did the projected model price do compared to the actual price, since we actually know that data. And that's how we're calculating what that forecast accuracy is. So it's a kind of a fun endeavor. It's something that we aim to, roll out across the board for all of the metals that we're looking at. So with that, Jason, I'm not sure what the next slide is, or I'm going to turn the mic back over to you. It's still me, Insights SV. This is our latest partnership, working to develop. There's kind of two problems that we're attempting to address for companies. The first problem is really around companies that are using, in some cases, our competitors or us, for contracting indexes. And what I mean by that is they are needing to update their purchase price based on the previous quarter's average price. So kind of the quarterly average index. Some cases, like for example, aluminum, might be a trailing 30-day average. And then that number is used to calculate the future price for the company for those either parts or the semi-finished materials. I will, Jason, I'm going to go ahead and share my screen and kind of give everybody a little sense of what this looks like. In addition, there's one other kind of interesting use case, and that is really, and I'm just going to kind of talk through it for a second. That use case is essentially to help companies plan where their cost of goods sold will be in future quarters. So if you're looking at sort of a forward price curve, you're essentially embedding that in there. You also can see, how am I doing, this quarter compared to last quarter? It becomes a tool that you can work with your executive team for earnings calls. What's the commodity volatility impact on my cost of goods sold for the next 12 months, 6 months, whatever the time period is? Okay, with that, I'm just going to do kind of a brief overview of this platform that's called Insights SV, which stands for Insights Spend Visibility. So what we've done here, and this is just like a little sample set here, so it's pretty generic. Essentially, we can pull in market quotes. There's also a way to pull in a contracting mechanism. We don't even need to know the source data or where that price is set by, or what. We just need the number, and we essentially can create a formula. So let me kind of show what that looks like. We've made up some sample parts here. You can see there's some different elements in it. So essentially what we're doing is we're taking, a calculated price for the quarter. We're looking at sort of what is the base quote price period. So what's that base piece times that copper content in this case. So it's a pounds per foot. We're essentially taking the trailing quarterly average, in this case, COMEX price, and the copper, base price, kind of to understand what that formula is. We essentially then take these various elements, and they're all kind of put under kind of one roof, if you will, and they can be applied to a certain set of parts. So here, just another piece that's kind of showing what the last calculation was. Again, if you're moving on a quarterly basis, you can see sort of when that is changed. It's time-stamped here. This is a wire and cable kind of example, if you will. And then down here, we're looking at, what has that part cost done over time? And we're working, if there is, like, for example, a copper or aluminum element, we can put in the forward price curve here, and that kind of gives a little more of the predictive sense of what's that impact on my part price. The way this is created, we basically you can look at it by purchase order, you can look at it by suppliers, so you can kind of compare suppliers. I'm just going to hop over here into, this is again, this is kind of like my sandbox, and this is a little bit still in development, but essentially you can look at, what's the difference in terms of my PO cost. Sometimes there's a delta between, my PO cost and what the index price says it should be. This allows you to dive into it. You could dive into it at the purchase order level, at the part level, at the supplier level. There's a whole range of tools that you can use to compare different time periods between quarters, looking back. You could also do it looking forward. And so that's kind of where we're going as a firm as well, to kind of tackle some of the bigger issues. What we've seen companies complain to us about is, one, from a staffing perspective. This is typically very time intensive and laborious to go through all of your parts, and to do that on a quarterly basis. You have to pull down, you're using templates, going through the parts, uploading the formulas, putting it back into your ERP system, sometimes a template into the ERP system, multiplied by the number of people that are doing that for a manufacturer that has a high degree of metal components in their cost of goods sold. So trying to kind of tackle that issue. So with that, Jason, maybe I'll kind of turn the mic back over to you, I think.
So we are just going to really wrap up now and ask if anyone has any questions. Obviously, a lot of the depth of this we can't expose at the form grade alloy level in demos. In terms of insights, you saw very high level aluminum. But again, there's a lot more behind that to drill into the very specifics of what you're actually buying versus what is traded on an exchange. So with that, we'd obviously like to thank everybody joining us, but we're happy to take any questions in the remaining time.
You can pop those onto the LinkedIn. We're in the chat there now.
We'll just give it another minute here if anybody has any questions. Well, if you have no questions, no problem. You can reach out to us anytime. This recording, I think, is being made available, but our contact details are here. You can find us all on LinkedIn. We tried to be as direct as possible in terms of who to reach out to. Any questions on insights, obviously you can ping any of us, but Don is your man. If you have any questions on where we're going on neural nets or insights SV, Lisa, and then for those in the consulting, private equity, or hedge fund world, you can reach out to me. So with that, we'd like to thank everybody for joining. Don and Lisa, we thank you as well. So with that, we can wrap up. So thank you again for joining.